Insiders may be selling them, but these three stocks are still good buys. Here to break down what's behind the insider selling on these three big companies is MarketBeat analyst Thomas Hughes. So, Thomas, we just did a video last week about insider selling, why it might be a sign of a stock you maybe don't want to get into, but there's a lot of reasons for insider selling, right?
There sure are, and especially in the tech sector, you have to remember that a lot of these companies use what's called share-based compensation. So part of the executive's pay package involves shares of stock. So naturally, over time, just at face value, they had to sell some shares just to cover taxes. So there's some selling right there. And over time, the stock might rise in value, and for them, that's a windfall. And there's really no reason for them not to sell and take some profits. Any investment advisor would tell them to do so. So you really have to take insider selling with a grain of salt, and then go beyond just that one factor and look at the fundamentals of the company to see if it's really a good buy or not.
How do the three picks you're going to share with us today differ from the three companies we kind of highlighted last week about insider selling?
Well, these stocks are all leaders in their field. Their product offerings have changed our lives deeply and will continue to change our lives long into the future. And within that leadership position are strong revenue, strong cash flows, and capital returns.
Yeah, so there's more details to consider other than just that insiders are selling these stocks. We're going to get to your list of three stocks that are just like that in just a moment. But first, check out this free report you can find on marketbeat.com. It's all about insider selling. It's 12 stocks corporate insiders are abandoning right now. It's a list of companies that might surprise you. Click the link in the description or scan the QR code on the screen right now to take a look at that free report on insider selling on marketbeat.com. Now, Thomas, let's get to your three picks right now. What's your first company where insiders are selling, but this is still a good buy in your book?
The first pick is Amazon, and it's not really a pick. It's a stock that popped up on MarketBeat's tracking tool. It tracks insider sales, right? So Amazon is the number one most sold by insiders in terms of the number of shares sold and their dollar value. So that's really saying something. Insiders sold more than 44 million shares. 52 trades by 11 insiders. So that's a pretty broad-based indication of insider selling. But again, this is Amazon. It's the world's leading hyperscaler. AWS is growing by double digits. Its consumer side is growing by double digits. It's expanding its footprint. It's deepening penetration of services. There's really no reason to be selling the stock as an investor, just watching it for opportune dips to load up on your position.
Let's talk about why these insiders from Amazon might be selling so much of the stock.
Well, Amazon is well known to use share-based compensation. So these insiders are being paid shares either quarterly or annually. And at some point in their conversations with their advisors, they're being told you need to sell some to pay for taxes, sell some to take profits, you need to sell some to reallocate your portfolio. Whatever the reason is, they're being advised to sell their shares. But again, for investors, the outlook for earnings and capital returns and growth outweighs the insider selling and makes this stock a buy.
Yeah, your next buy that insiders are selling is a company, again, everyone was very familiar with.
That's Meta Platforms. It is the most sold by insiders regarding the number of trades. MarketBeat is tracking 185 sales by 10 insiders that include the CEO, Mark Zuckerberg. But again, this is just in alignment with share-based compensation. You need to look at the pattern of activity. They're making these sales pretty regularly and in small amounts. So they're just taking little bits of profit here and there when they need to. There's no big red flags of anybody trying to get out of their positions really fast. Insiders still own quite a bit of the stock, so it's not like they're jumping ship. They really are just taking some profits off the table.
And how is this stock performing right now and outlook for this year for Meta?
Oh, the stock is performing very well. And that's because 2 years ago was the year of efficiency. That was compounded by the push into AI. Both of those things are driving revenue and widening margins. Cash flow is robust. The outlook for this year is for another solid gain, wider margins. There was some concern about them spending more money on AI, but so far the money they spend on AI turns out results in the top and the bottom line. So long term, the stock is heading higher.
All right, let's get to your final pick. And this is a company we've talked about very recently on this channel. We've talked about them a few times before, but there's a good reason we keep talking about this stock.
That's Intuitive Surgical. It's number one for the number of insiders selling. So again, we have a broad-based number of insiders selling the stock, but the pattern of their sales aligns with share-based compensation. We know that this company uses SBC to pay their employees, so a little bit of regular selling in a stock that has been trending higher robustly over the last few years is really not a problem. Each time it ticks higher, we should expect them to take a little bit more profit off the table, and it's only their right. They've built a fantastic company. They're self-funding growth. I mean, one of the biggest highlights of this company's statistics is its net cash position. Its cash is 4 times total liability. So it can pay off all of its liability and still have, I mean, so much cash you can barely count it. It's a good stock to own.
And it's a good problem to have for sure.
Yeah, right.
You've already mentioned quite a few factors, but what makes Intuitive Surgical a stock and a company that you would hold long term?
Well, it just comes down to the business. Intuitive Surgical builds robotic surgical devices. Support for the tool is cloud based. It's deeply rooted in AI. There's demand for the product. Places where the product is in place is seeing increased comp procedures. So there are many tailwinds for the business. It's a leader in the field. The statistics just show that it's head and shoulders above its competition, and it produces really robust, awesome cash flow. And that's really the bottom line when it comes to investing in stocks.
Well, some good tips for investors here and three great stock picks that we've talked about before, but there's always room to learn more about these companies. Thanks for your time again, Thomas. And if you're looking into more about insider selling, we just did a video last week where Thomas really dives into how you can use MarketBeat to figure out which stocks have a lot of insider selling right now. Check out that video and all of the other videos you can find on our channel on MarketBeat. Thanks again for watching us, everyone. And as always, happy investing.